Are we live? We are live. Santa Claus rally. Let's go. Market is starting to bounce. Let's take a look at those technicals. First off, look, jobs report was pretty crazy, right? Nobody expected jobs to come in that strong, but we have some other, we have some other things that show some weakness also, right? It's not over yet. Really a Goldilocks scenario where, hey, inflation isn't that bad, but growth is starting to come in. Jobs are better than expected, right? And I think we have a year-end rally. I think we get the seasonal Santa Claus rally. Let's take a look at the charts here. First off, S&P 500 moving up. We got down to 419 in pre-market, right? This was the drop. Let's look at the drop here. This was the drop. Report comes out, what is it? Payrolls come out way higher than expected. What is this big drop? This is signaling, hey, the Fed's gonna hike rates. The Fed's gonna get tighter here because wow, those jobs are way stronger than we actually expected. But average hourly earnings actually were down or flat. Unemployment higher than expected. So you have a lot of contradictions here. What's actually going on? We're gonna dive into that. But let's look at the price action here. S&P from the lows. Okay, we got down to 419. We're up to 431. Are you kidding me? What a rally. This was 2.5% for the S&P, I believe. It was a 2.6% for S&P. Big rally. I mean, hey, the shorts are covering. Why are the shorts covering? Why the heck are the shorts covering? What's the deal here? We got shorts covering. Well, let's take a look here. Why are jobs so strong? Okay, why are jobs so strong? For fiscal policy. You guys got to keep that. We keep talking about this fiscal spending is keeping jobs strong. Inflation Reduction Act, CHIPS Act, infrastructure. Those are creating more jobs. One month we're down, 1 month we're up, creating more jobs. Okay, multifamily construction is booming, especially here in Phoenix. Okay, Colorado, right? You ask a couple of people, they're building so much construction. And you need more jobs. Okay, these are not career jobs, but they're there. So you're getting more jobs coming in. Oh, I don't agree with, I don't believe the lot of revision. Yeah, we're getting a lot of revisions, but this revision actually went up. They're revising jobs up. What? So, the economy is in this rolling, recession / expansion here. And I think we get this into year end and then it ends. Because why? Seasonal spending, right, is fueling a lot of this. UPS gets the seasonal workers because all these packages, you got Black Monday coming up, right? Cyber Monday, my bad, Cyber Monday. You got, Thanksgiving. Look, it's holiday spending. You need more workers. The economy is booming to some degree. Maybe, it goes out later, but this is where we're at. This is what we're looking at. ISM new orders has been reflecting this. No, I telling you guys, the manufacturing sector is recovering. Okay, the manufacturing sector is recovering. New orders are the most forward-looking indicator. Those orders have been up in the manufacturing sector because people are building new goods for people who want to spend money in Santa Claus, during Santa Claus. Santa Claus is fueling the economy here, right? He's going to the North Pole, creating new orders. And he's going to deliver those orders, and he's going to deliver a Santa Claus rally in the stock market, right? The market was also extremely oversold, right? Looking at the daily chart, oh wow, why did this thing, bro? I did not do that. Let's get this. Let's rein this back in. Come on, I'm switching the chart. This was the intraday price action anyway. This was intraday. Let's take a look at the macro price action here. And yes, we're going to talk about rates. We are going to get to the rates. SPX. Now let's go SPY. I know everybody's looking at SPY, S&P 500, SPY. Let me throw myself. Let's scoot in here. Let's make this a little more digestible. There we go. Okay. So S&P, big move today. Now, this move wasn't just crazy buyers. There's also shorts covering, right? This is what they wanted, the worst news, but that news was already priced in. Okay, nobody expected jobs growth to be that high, but they also did not expect average hourly earnings to turn down, to come down, participation up. There is no sign of recession. Initial jobless claims, the moving averages for initial claims are still low. Okay, so you either choose to believe the data or not. It doesn't matter what you think in the short term, right? What matters is how is the market going to digest these numbers? So let's look at these. Is this jobless claim? No, that's not claims. Where's employment at? Check this out. This was from, I think 2 days ago or yesterday, right? Initial and continuing jobless claims are rolling over. This signals, the economy is recovering. It could spike back up, but hey, we're looking over the next 3 months, the next quarter, and that is not happening. So, the economy is recovering in the manufacturing sector. What else did we see? We also saw this month or this week the ISM-PMIs, right? The ISM new orders. And listen, productivity is picking up. That means if new orders rise, if growth picks up, but your productivity picks up, your production picks up, well, that's the perfect scenario because now you can grow without inflation being the problem. Now you can grow without inflation being the problem. And that is a Goldilocks scenario for the market. Hey, are we saying this goes up forever? No, right? Maybe we head into year end all-time highs and then we pull back and the recession really comes because those rate hikes are going to come in. But look, we're oversold. The S&P was oversold. What do we say? We're going to bounce here. This is like a huge, like a giant, what do you call those? Spring, right? The spring. Look at this is the spring down here. The spring is starting to coil, despite whatever the news is. Any bit of good news. It wasn't openings. It wasn't job openings. That was bad. It wasn't, payrolls. That wasn't good. It was the average hourly earnings coming in flat, meaning no wage inflation. It was labor participation staying high. People have jobs. Right? What else was it? Did I forget something else? It was also the employment report. Oh, unemployment higher than expected. So, hey, we're still, people are still losing jobs. What's going on? This is making it's a rolling recession. Perfect scenario. If growth is too strong, the Fed keeps hiking, rates keep surging into the future. If growth is cooling but still above trend, still kind of even, perfect scenario, right? Inflation is not going higher. If growth collapses, bad news. It's not happening. We're not seeing that. Santa Claus rally. This is the setup. This is the setup we're seeing. Santa Claus rally. Keep that in mind. Also, what was this indicator? Let me pull this up too. We had this today. I know this is on the Twitter. We could also pull that up. This was oh yeah, that ticked lower. Actually, the average hourly earnings actually ticked down. That is literally the perfect scenario. I don't know if this continues, but for now, the market loves it. The market wants to see this. This is what the market is actually expecting, right? Let's take a look at the no, let's stay here. Let's stay here. Let's stay here. So yeah, that's what we're looking at. Look at we broke the trend. We're coming back in. Maybe we roll over, but what do we see? We said, hey, the RSI needs to come back up. We need to fill the gap at 438 for the SPY. I think we go to 438. We'll see. If you go to SPX, we're looking at what? Same thing. We're looking at somewhere between 4373 and 4400. That is the gap to be filled. You're getting not really a wedge pattern, but you are getting this flag, right? You're getting a bull flag here. It kind of broke down, honestly, but look, it's coming right back up. So you're getting the bull flag. We'll see. We'll check the moving averages. Look at that capitulation, though. That is what I'm talking about. That is strength right there. Capitulation back to the upside. Buyers are stepping in. And the story here, like we said, the story here is what? Investors don't care. They're looking past rates. They're looking past the rise in rates. First of all, they think we're at peak rates, right? Bonds are going to get bought up. We're looking at peak rates. Everybody expects a slowdown recession into Q4. Q1 2022, once 2024, once everybody stops spending. And I think we're at peak rates here. Yeah, 30-year rates are still rising to some degree, but they're very overextended. The dollar overextended. That is whipping back. The dollar whipping back. The macro forces today eased off this report. So that starts the first leg, right? The first leg has to be at least a week or two. So we'll see. We'll go into earnings. We have inflation in about a week. So this is the beginning of the first leg. I don't know if it continues. We'll see. We'll track the data to see if it continues. But we did say, hey, we're going to have a rally here on Friday, mostly from the technicals and greedy investors who want to get long tech, who want to get long investments that have a lot of cash, that have a secular trend here, right? That's what we're looking at. Okay. Let's move forward. Let's move forward. Let's look over here. Again, like I said, throw your comments in there. If it's Tesla, whoever it is. And let me make sure I didn't miss anything. By the way, Tesla cut prices again, right? So Tesla earnings are going down probably, but guess what? The demand is going to rise. These prices are way too high, and prices are just way too high. What did we say yesterday? Very oversold. This was yesterday. Very oversold market. Okay, what did we say? We called this yesterday, Santa Claus rally. Peak yields, peak dollar, peak oil, peak vol. Very oversold market. Pick your spots. The bull market is coming. Right? The end of year bull market, not forever, but end of year, right? We're short term at this point. Long term, we're still going to be in a bull market long term because if something breaks, the Fed is going to cut rates. The Fed is going to step in, increase liquidity, whatever it takes. They're going to plug up the holes. No big surprises here. Okay. So initial rates jumped when the report came out. Initial rates jumped. You saw the S&P, sell off. But payrolls, yeah, they crushed expectation. That's bad, but that's a good problem to have. Growth is too strong. That's a good problem. And then you You can reverse that by looking at unemployment up, wage pressures down. Okay, so that's the short squeeze. We got the short squeeze. There's more positives than negatives. So take a look at this. More positives than negatives. Non-farm payrolls. This is just a snapshot picture. If you look at it, non-farm payrolls. Yes, that was a red flag, bro. That was a red flag. Rate expectations went up after this report. Red flag. Economy's too strong, nasty, but the unemployment rate actually stayed the same from last month, and it was actually higher than expected. So it wasn't that bad. It wasn't that bad, right? So the market's saying, okay, well, yeah, payrolls were up, but unemployment's not ticking up. I mean, not ticking down. That would be negative. Bad news is good news. So we had more. It's funny. We had more bad news than good news, which made it good. It's really tricky, tongue twister there, right? That's why we're here to report, because the market will trick you. It's not rigged against you. It's rigged against the knowledge you haven't gained. It's rigged against your inability to digest the data correctly and stop listening to what everybody says. They're fear mongering, right? And we can still roll over, but you got to digest this data. Anyways, average hourly earnings on a month over month basis, it came in lower than expected. No wage inflation on a year over year basis. It came in lower than expected and lower from the previous month, better than expected, right? No wage inflation. No wage inflation. Why? Because participants are still stepping up. They're coming into the workforce. They're still coming into the workforce, and that'll continue as we move forward. So why are jobs so strong? That's the second question you got to ask yourself. Fiscal spending, IRA. Oh, we already went through that, right? Go check out the Twitter if you want to see that. Also, oil collapsing. What did we say? This was the golden nugget. If oil rolls over, this is gonna further. Oh, we got some S&P. We're gonna check FactSet. S&P earnings are starting to come out. Earnings are bottoming here too. We're gonna go over that. Crude oil collapsed over the past couple days, which eases input costs, less inflation. Gasoline prices. Why? We just heard the video yesterday, and the video told us yesterday that those input costs are coming down because everybody traded oil. We thought this was going to be a long trade. Everybody's long oil. When everybody jumps in, the opposite happens. The smart money says, okay, you guys are all long, we're out. We're shorting oil, and we're going to short energy. We're going to short oil. You see all the gas producers down, and we're long big tech. And NASDAQ is catching a bid here, right? NASDAQ is catching a bid. So oil comes off. That lowers future expectations of inflation, more constructiveness for the market. The market is looking very constructive. How do you argue against this, right? We're getting the bounce. We're getting oversold. The technicals are aligning with the macro for a year in rally, not for a forever rally, for a year in rally. Those rate hikes will come in eventually and probably punish the market, but not yet. Not yet. What are we missing here? What are we missing here? We have some more content. Where's the other content? Here we go. Jobs, right? The jobs report alone is not enough to get the Fed to hike. Either way, hike or not, investors are jumping in, right? They're buying these dips. Buyers are looking past the hikes. They think the peak in yields are in. We just said this, right? Great buying opportunity off the 200 daily moving average. We already called that, right? They're going to come in and buy. Hey, if we roll over at 4,400, then we might be in trouble. But for now, the trend is up. For now, the buyers are in. Okay, so we're going to pivot. We're going to pivot with the data. We're going to pivot with the technicals. We're going to pivot with the psychology. We're going to pivot with the fundamentals. We're not just going to stick to one narrative because it feels good, because we don't want to be wrong. Okay, that is the game plan. Great buying opportunity for them. They're fit. Listen, these guys are fishing for efficiencies, right? The big fund managers want efficiencies. They want companies that can still perspire, or still they can still be resilient while rates are up, because they can borrow that money market fund liquidity and fund their own growth. They want, while inflation is still high, they can still grow revenues in this environment, right? The oil plunge lower lowers headline inflation expectations. We just went through that. Keep that in mind. Oil needs to stay sideways. And this was a big drop in oil, right? Seasonal spending is fueling these jobs. That's what I think. Going into the season, I have a lot of people who work for UPS, and they're always saying, hey, you want to come join UPS, right? You want to come help us with the seasonal, gain another job. So that's what's happening. Seasonal spending. Everybody's going to the mall. Everybody wants to buy new stuff for people that don't care about their credit card usage. Really, Americans are over consumers, and it kicks in the fourth quarter. And the earnings recession is over. The hiking cycle is ending. Global liquidity is starting to turn up. Shadow QE is still online. We still have shadow QE. We're going to go over the charts. I know you want to see the charts. Okay. Markets have a lot of are very constructive over the next 3 months. I think this is the first leg. Does it last? I don't know. We'll check the technicals, but pick your spots. Swing at the best pitch. That's my, swing at the best pitch. Pick your spots. Check this out. Check this out. I can get it up there. Can't get it up. No, I'm just kidding. All right, so here we go. SPY. Here's a SPY on trend. Right now, SPY is a little off trend. It is kind of breaking down. We got to give this above. It's not over yet, but we got the first push, and the RSI should take us back up. Shadow QE still breaking out. Reverse repo money is still coming in, providing liquidity. FedNet liquidity stepped up after the past couple of days. Right, global liquidity stepped up. China is still printing. So what are we saying here? Yes, global liquidity is low, but we're at the cycle lows here. It should pick up from here. It should pick up from here. But if rates keep climbing, it does drain liquidity. So we got to keep our eye on rates. And maybe rates peaked for the next 2 months. Maybe they peaked. We got to keep our eye there. I don't know. Equity put to call ratio also peaked. We'll go over that. Vol peaked. What else do we have up here? The Fed's going to step in if something breaks. Okay, let's get back to the charts. The Fed is going to step in if something breaks. What's up, Carbides? Shout out to you. Today in pre-market, SPY hit the 200, moving out exactly perfectly and bounced on the 1 hour. Recent price action shows an RSI divergence. So I think a short-term bounce. That's exactly what I'm saying. Short-term bounce is what we are seeing, a short-term bounce, but I still think there's more fuel going into that. And let's go ahead and see what FactSet just said. FactSet is a good resource for S&P 500 fundamentals. Okay, so keep your mind on this. I haven't even looked at this yet, so we're going to look at it together because we're in this journey together. Carbides also says, then a rally if economic data allows strong consumer soft landing, huge rally. Yep, I think we're going to see that. Why? Because seasonal spending. Consumers are 70% of growth, and that's going to continue. That's going to continue. They're going to keep, they're probably going to tap out in Q1 of 2024, but for now, they're going to keep spending. The market's going to look past that to fiscal spending, right? Infrastructure. Companies like chips, they don't care. AMD, by the way, is breaking out. AMD, big move. I need to take a second look at that. It's looking pretty, looking really pretty here. So FactSet, what do they say? S&P 500 index showing positive trend. Hold on, back up here. Showing a positive trend over the past 12 months, October, but with noticeable inflationary pressures and rising interest rates, what does the future hold? But here's the thing. Inflationary pressures, what are you talking about? PCE was coming down. Wage inflation was coming down. What are you talking about, FactSet? This is where you get confused. The pivot is upon us. The pivot is upon us. Inflation expectations are not going up. We got PCE and it was lower on a month-over-month basis. Inflation is not going higher. Stop believing this, right? Prices are up, but inflation is going to collapse, especially if consumers, start to roll over. Okay, the mortgage market is dead. So yeah, number two, rising interest rates. Well, I mean, if the Fed pauses, they're not rising, number one. Number two, yes, they've been rising on the mortgage market, but if you're trading here, if you're trying to get a pivot, the rates might have peaked. I'm going to put a 50% chance on that. They could keep going up. We're going to watch the dollar also. So what does this hold for the future? Well, where's our S&P earnings stuff? Last year, S&P took a huge blah, 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 blah. I'm looking for earnings expectations. Where's your chart at? Maybe they don't have it yet. I'm waiting for the charts to come out for FactSet to show earnings expectations going forward. We do have bank earnings first. Also, we're going to have bank earnings. We're going to see how bad they look. Bank term funding programs still fueling the weakness in a lot of those, blah, 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 right? It is what it is. All right, let's go to the chart. Let's go back to the charts here and look at the macro forces, because at the end of the day, you can read the data all day, but you want to see how the macro forces actually respond to the data. What do we got here? What is it? What chart is this? Oh my gosh, look at that. This is the weekly chart of the 3-month treasury yield. Look at that overbought conditions, but that's not what we're looking at here. So 3-month, we did have a spike early in the morning. These are short bills, but the reverse repo facility is eating up these treasury yields. Yields are not going higher in the 3-month. They're not going higher in the two month or 2 years, right? Short-term rates are not going higher. Reverse repo liquidity continues to come in. 5-year rates, whatever. 10-year rates. This is the benchmark rate. This is what we're looking at. Double top. The RSI still looks bullish here, so I'm not going to doubt that I can't go higher, but we are at a double top. Okay, big capitulation. There is no real read there. We might continue higher, but we could, keep your eye on the rates. We could be making new lows. We'll keep our eye on that. 30-year, I think, made a new high this morning on the report initially. But what does this say? What does this actual move say? This move is saying, oh my gosh, jobs stronger than expected. Why didn't it keep surging then? Because average hourly earnings coming down. Why? Because unemployment is probably going to keep stepping up in some areas, right? Or stay where it's at, 3.8. We don't want to see unemployment drop. We want to see bad news, not too bad, not too bad, not too good, just right in the middle, right? So 30-year yields, that's what they're speaking. TLT, long bonds, got received a bid. I mean, these things are extremely oversold. This is why I think we get a bounce too. This is extremely oversold. Okay, this is extremely oversold. Look at this. Look at this oversold. This is extreme. So if bonds rally, the stock market rallies because rates come down. If bonds rally, the stock market rallies. It's as simple as that. If bonds rally, the dollar rolls over. It's at a critical level, 106. We want to see the dollar for the bulls to get below 105.50. That's the level, 105.50. But if it turns it into support, now we're going to be looking at shit, dollars going higher. That's a macro negative force against us. But that's not always true. Either way, look at this march for the dollar. It's marching higher, right? It is squeezing global flows. Why? Because 80% of the world is denominated in US dollar debt. So as the dollar goes higher, their debts go up. Therefore, the risk of default for other countries goes up. They're indebted dollars. So maybe they're doing a deal. Maybe we get China, talk to Joe Biden, who knows, or some other, we're looking for a deal to get the dollar lower. That's what they're looking for because the dollar is crushing global economies. It is putting pressure on global economies. It can keep going up and cause risk. Something may break, but the RSI is starting to go lower. So maybe we run out of juice and the dollar goes lower. Oil, this was a big surprise. I didn't think we were going to drop this quick, but oil's breaking the uptrend. For traders, that's it. It's over. Maybe this is done. All right, we're at 83.50. We're at the previous support here. And if you look at October, this is a good setup for October inflation. Wait, is this October? No, this is a good setup for November inflation if this continues, because we already know core is coming down, right? Core is coming down. But if October started off here at 92 and it finishes off at 87, boy, that's going to be a big drawdown. And I think the market is sniffing this out. Look at the inflation that comes from oil prices is going to factor into November. And if this continues or stays sideways, that report's going to be very constructive for the market. We could see 3% back to 3% or even 2.9 headline CPI. We could see 2.9. We'll see. We have a ways to go, but you got to know the optimism and the negative, right? Look at commodities. Nat gas is picking up. This might be a negative force. Nat gas is picking up. You might want to trade it, own the inflation. Copper's going nowhere. Wheat still making new lows, whatever. VIX came down. So look, VIX also a liquidity indicator, right? The insurance against the S&P 500 is coming down. Look, we're at the top. So the VIX is improving. NASDAQ volatility. Oh, that's actually up versus SPY volatility. Very interesting. Move index, biggest risk here. Hopefully it topped out. Hopefully bond volatility topped out. That's not going to be good if it keeps going up. This is a warning for the bond market. This is why if this breaks out, something's going to break. If we see bond volatility keep going up, something's going to break in the market. Fed steps in just like it did back here in March. And, the market, just shrugs it off, whatever, next, right? Also, this is also another warning sign that something might break. Equity credit risk is climbing. Oh my gosh. But hey, guess what? Put to call ratio peaking, right? Maybe, but it did peak. I think it peaked. I think we have a rally. So you have more variables positive for a market rally. In my view, you have more variables that are positive than negative going forward. That could change quickly, but as of now, right, everything else held equal, I think we're in good shape here. I think we're looking in good shape here. Let's see if this bounced. Okay, finally we got stocks moving above their 50-day moving average. We'll see if that continues. Here's NASDAQ. Look at NASDAQ, NDX. This is the big NDX. We need to get back in this zone to get bullish again, to get extremely bullish. We need to get back in here in the uptrend. Either way, NASDAQ is in this flag pattern. It's falling in this flag pattern. All right, let's take a look over at what you guys have to say. You made 238% on SPY today. Hey, congrats. Did you sell? I'm good. Hey, Friday rally. Congrats. Shout out to you, Slimesy, smashing it. Look, you made that money because you were smart, because you were like, hey, the market is oversold, right? Everybody's on one side, everybody positioned negative, everybody's hoping for the recession. Didn't happen. Just didn't happen. Market's oversold. People are greedy. They're very greedy. They want more stock. They want more NASDAQ. They want more Apple, Amazon, Google, Facebook, Tesla, NVIDIA. We also saw Tesla today. What did it do? Tesla really sold off hard, and it just capitulated from, like, we'll go to the 15-minute chart. Check this out. Tesla gaps down. I mean, maybe it finishes lower. There's a resistance at 261. Gaps down, recovers all the way, gets above the gap, holding the gap. A lot of strong, and they cut prices. The market is strong. It wants pricing power here. The market wants pricing power. Not everybody will survive. This is only the best will survive. I'm doing good, by the way. The upper wicks on the daily show strong rejection, strong rejections with bonds. Are you talking about TLT? See, maybe I'm. Oh, okay, strong. Yeah. Oh, okay. Bonds still getting rejected. Hey, don't ruin the party here, carbides. No, I'm just playing. Don't ruin the party. We need bonds to go up. We need long bonds to go up. That is the party, right? When this breaks out, that is the party. I just think it's extremely oversold. It does look like it has more time to consolidate, but overall, there just might be more strength in the stock market. I think people are greedy right now. They missed the big rally. They want to buy the weakness, oversold into the 200 daily moving average. You bought some Tesla, nice. You bought that gap down in Tesla. They're cutting prices. The story is ending. No, you're wrong. They're cutting prices. They're going to swallow the competition because their prices increase with the wages, or they take a loss, or their company fails. They're screwed. They're screwed. They're screwed. Tesla's, the narrative is playing out, and we haven't even heard of the Cybertruck. We haven't even got full self-driving confirmation yet. And I think the market's going to look past and say, this is the bottom of earnings for Tesla. This is the bottom for EPS because of the price cuts. It already priced it in, right? Right now, the market is pricing in the price cuts. So I think we're moving higher for Tesla. Doesn't mean go bet on it. Yeah, I did close my position, bought calls at 80 cents, sold at 248. Dang, congrats. And could have waited for more. They got up to 370. Goodness sake. Congrats. Very oversold market. Big bounce. Moving higher. Okay, what do we got in here? Any concerns? Any concerns here? Let's take a look at the trade. Let me see. Did I pull the trading charts up? I mean, this was a very nice move for the S&P here. I really like this move. I want to check these charts out. Okay. What do we got? 42 seconds. Also, what I don't know what happened to my, why did it go full view? Maybe I clicked this. Oh, there we go. There we go. All right, yeah, let's get that fit in there. All right, so what are the technicals looking like for S&P? Have we finally got a bottom here? I don't think we're out of the clear yet, but FOMO, right? We're getting FOMO. So the big level, let's take the pre-market off. We don't want to see the pre-market. If you are charting, take the gap strategy. Well, that's what I call it, the gap strategy. We didn't even fill the gap yet. So the gap is at, there it is, market over. The gap is at 432. Okay, 432. 432, 20 cents. Almost fill the gap. Almost fill the gap. We could rotate lower, but I still think the bottom is happening, right? Yeah, we might come down a little bit, give more, and that's going to give more chance for people to get in. But we do need to get above 432 and hold, move to the next gap at 438. So let's double this. Let's duplicate this drawing and move it down because we got a gap here. Got a gap. That's our gap right there. This blue line, I guess that could be resistance. Let's take it off. That was probably from the past. Remove that. So S&P did break the downtrend, though. We are breaking the downtrend at the moment. Very constructive. We did a lot of bottoming out over the past couple days, moving up. See if we hold. If we can actually hold that. We have Bukowski over here. Oh, and look, NASDAQ looks even better. NASDAQ filled the gap and held into the close. That's very constructive. OPEC raised oil demand view, long-term outlook. This is bearish for oil because they're saying, okay, more demand. To you, it sounds like it's bullish, but it's actually bearish because more demand means more production. Where production has been cut. So if they increase production, prices go lower. Prices actually go lower. Everybody sold oil, or maybe I'm wrong. Maybe there's a bounce, but from what we saw yesterday, in the video, go check out the video. This guy's talking about oil. He's saying that there is more supply starting to overcome the demand. So production steps up. A lot of the OPEC countries are still pumping oil, and that supply is just going to overpay. It's good old demand and supply dynamics. What do we got here? 10-year yield bond looks like it's rejecting. US 10-year. That looks like a double top for sure. I think we got peak yields. And we won't know till inflation comes out next week. But I think we're at peak yields. I live in Norway. Here, 80% of new car sales are EVs. Tesla is leading by far, at least a third. See, there we go. There's your bias. You're in Norway. Shout out to Norway, the Norwegians. Shout out to Norwegians buying those EV sales. That's going to continue. I think they came out too with the what was it? The tax rebate. So people are getting excited. They're like, oh, shoot, I get a rebate. Not only are these stupid car prices elevated, I can't buy a new car. Used cars are crazy, retarded high. Sorry, TikTok, probably going to ban me. And, prices are too high, but Tesla's over here cutting prices. I might as well go to EV. Gasoline prices are too high. I might as well go to, and I get a tax rebate. Come on, you guys, use common sense here. For you Tesla haters, use common sense. There is a secular shift to EVs being supported by the government, and most of all, being supported by price. I think oil stays sideways. Maybe I'm wrong about oil, but my guess is if they're going to start increasing production, boom, oil stays flat or goes lower. On SPX weekly, if you draw a parallel channel from the October 2022 low until recent price, we are back inside the channel, which is strong. Yeah, SPX is the trend for SPX is better than the actual SPY. Watch, we'll take a look at that. Let's go to that daily max chart. And I think we can expand this a little bit. We're still in the uptrend. Let me make sure. Hold on. Is this? No, I don't think that's what I think it is. Well, this isn't the best trend. Let's remove that. Okay, let's draw it. Is it gonna work? Is it gonna work? Boom. Barely. So we're coming back. I mean, it could get rejected. So really key level is where we kind of got rejected. Key level. This doesn't look great, but this big bar is beautiful. You can't deny that. You can't deny the big bar, right? So what do we need to get past? It's very clear. We need to get past 43.30 on S&P. Probably just fill this gap at 43.36 for for SPX. What is SPY looking like in the short intermediate? Yeah, SPY, same thing. So it doesn't look great, but you could see the head and shoulders here, right? Shoulder, head, shoulder, reverse head and shoulders. We're going higher. I think we're going to look constructive here. Yeah, I'm looking at SPY on the weekly. Do you think, you said the weekly. I was looking at the daily. I mean, it's pretty much the same thing. Right? SPX weekly. Just make sure we hit that chart. And that's what's beautiful. Look at these capitulation patterns. To end the week too, 1-2. Look at those. This is a sign that buyers are thirsty, bro. They're thirsty. They're thirsty to get on this second rally. I think they're sniffing out the Santa Claus rally. They're looking at the data. They're sniffing it out. Goldilocks scenario. So what did you say? You're looking at SPY. I'm looking at SPY on the weekly. Do you think it might need to touch 418 in order to get this market rally so it can touch that 200 EMA also and bounce off the support zone? Well, let's turn on the 200. I'll show you what I got on here. Look, we're short of time. We're short on time. Throw out your stuff because I'm gonna make this one short today. I'll have the report out tomorrow, but I do have my dad in town. Gotta always honor the fathers. Okay. Anyways, we got the here's your 200, right? The 200. Look at this is I think we're looking at a reverse head and shoulders with 200 EMA or SMA support. I think that's what we're looking at here. And I think we got to break over this level. I mean, that was a strong rip. Where's the volume here? Let's go to SPY. Where's the volume here? There it is. Nice volume over the past couple of days. Now, look, I'm not saying there's no way I think this is what we're doing is we're developing. We're looking at the first leg of the Santa Claus rally. First leg will be confirmed once we get above 432, right? 432. When we close the gap at 432 and move higher, that is the first leg Okay, that's the first leg playing out. This is like the third of the first leg, right? So the first 30%, second 30%, we get above it. Third 30%, we get above this trend. The first leg breakout. Second leg, we go to all-time highs. Well, we go to previous highs. Third leg, we break out all-time highs. Okay, that's how I'm measuring it. Maybe I'm wrong. I'm gonna bet on it for now. I really like Meta on the daily time frame. Oh, Meta, nice consolidation. Let's look at the Mag 7. Hey, it looks great, bro. It looks great. We'll do some technicals maybe tomorrow. Uh, but look at Meta, Apple with the falling flag pattern, bro. AMD, yo, if I had some, look at AMD breaking out, finally above the 50-day moving average. I still want to see some support, but AMD looks beautiful, and that is a humongous flag pattern there. Big flag pattern. Looks really strong. Yep. On the weekly, we could have a hammer if we get a lot of upside next week. 100%. Look at that hammer pattern. The market is setting up. We want to see we want to see a large weekly candle next week for a strong upside continuation. 100%. Carbides, do you have a Twitter? You need to start tweeting this stuff, bro. You got to get your Twitter. Throw your Twitter in there so we can hear your technicals, bro. Yeah, 100%. So we're looking very constructive. Also, this wedge. Oh my god, I know it's marked up like crazy. I know I have a lot of stuff on here because obviously I'm trading it. We're above. Look at these moving averages. 200 starting to point up. The 100 pointing up. The 50. We need the 50 to point up. Maybe another week, but we are wedging here. Test a perfect wedge, right? The next leg is going to be above 262. We get above 262. Maybe we break out into earnings. We could break out in earnings. I don't know. We'll see how this works out. But this is a really nice setup here. Really good setup for Tesla. I like it. People really tried to short the 200 SMA on SPY. It's October time, baby. Yeah, it's seasonality. Also, October, seasonality. We're heading to the best for how's NextEra Energy looking. I know some of the energy looked bad. What is the ticker? I don't know what the ticker is. Dimaj. Easier on the YouTube, by the way. You guys jump on the YouTube, then I don't get lost. I don't have to go search for comments. Appreciate the likes, you guys. Got the likes at 1K. But pat yourself on the back if you stayed strong. What's up with the bond market today? What up, Strawberry Man? You just got Strawberry Man. What's up with the bond market? Well, the bond market is oversold. Okay, it's extremely oversold. And you're gonna get a technical pullback for the bond market. You're gonna get a technical pullback because it's just oversold. Also, the data showed that average hourly earnings wage inflation is coming down. So if it's coming down, then the people shorting the bond market had to cover. So you got that capitulation. The short end of the bond market is fine. It's the long end that we worry about. The 30 years the worst, the 10 years okay, 2 years are fine. So that's what's happening. And also gas is, I mean, oil prices collapsing. So that's going to get the bond market to pause, to stop shorting so much. Right? If the Fed does pause, the bond market peaks. So that's what we're staring in the face. This is not over. This story is still developing. Okay. But we got to track it. Right? You got to track it. It's like tracking your progress. You don't just gain 30 pounds of muscle, it's in increments, small little wins. And this is a small win for the Bulls. This is a small win for the Bulls. We just need more wins than losses. We got to weigh the probabilities. We got to use logic and reasoning. And we can't just say it's going higher just because. So that's what's going on with the bond market. What if this month will be different from all the other Octobers? October is the bear market killer. Typically, it happened in 2022. We saw a chart of that. We talked about it I think last week. 5 of the last October to Decembers, 5 of the last 6 October to Decembers were market rallies to the upside. So what if it's different? Well, it's not just going to be different. Slime Z, what I would say is if yields keep climbing, if the dollar keeps breaking out, if oil keeps surging, it could be different. But if yields have peaked, dollar peak, yields peak, right? VIX peak, We need move index to peak. We need bond volatility to peak. I think we're going higher. So the next two catalysts, right? To remember, we're done here, right? You guys, we're done here. We're about to head out. Okay. Scarcity. The next two catalysts are the inflation report next week. We're going to be focused on not on just headline, on core. What does core look like? Number two, earning season starts with the banks. Those are our two major catalysts. And if you guys do, fair good theories, thank you, 100% strawberry. Also, okay, the next thing is, remember the last market rally that started in June, I believe, August, June? It came from better than expected inflation plus in earnings better than expected, and earnings are bottoming out. Okay, if you want this data organized, go check out the go sign up to the newsletter. It's free. It'll come in tomorrow. It's basically all my thoughts are more organized, because I just, when I come on here, just blah 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 blah. I'm going to tell you what I think. Okay, but if you want it more organized, go sign up to the newsletter. It's free. It's the link in the description, right? Link in the description. Go check that out. And if you like to read, all right. Other than that, I appreciate you guys jumping on. If you have any questions, throw them in the comments. I'll read it later. And you guys stay blessed. Make sure you get your workout in. Don't do nothing stupid this weekend. Hey, Slimesy, don't go waste your money either. Save it. All right, save it. Don't simp. And yeah, you guys stay strong. Keep a growth mindset. Learn something new this weekend. Have fun. Enjoy your life. Christ is King. And yeah, you guys stay blessed, man. I'll catch you tomorrow. I should be doing a live tomorrow. I think I'll be doing a live tomorrow. Okay, just got some family in town. We'll see how it works out. It'll be a short one, but I appreciate you guys. Shout out to you guys for staying up. I appreciate you guys for real, for the support. All right, you guys have a good weekend. Stay safe, man.